Higher education is a major investment, but the federal government offers helpful tax credits to offset the cost of tuition, fees, and course materials. The two primary tax breaks available to students and their parents are the American Opportunity Tax Credit, or AOC, and the Lifetime Learning Credit, or LLC. While both credits help reduce your tax bill for post-secondary education, they have very different eligibility rules, values, and limitations. Claiming the wrong credit or failing to understand the differences can cost you thousands of dollars in lost savings or trigger IRS filing errors. In this walkthrough, we will compare the AOC and the LLC, detailing who qualifies, how much each credit is worth, and how to choose the right one for your situation. By the end of this video, you will know exactly how to maximize your education tax benefits. Let us start with the American Opportunity Tax Credit, which is generally the more valuable of the two options for undergraduate students. The AOC is worth up to $2,500 per eligible student per year. It is calculated as 100% of the first $2,000 of qualified education expenses, plus 25% of the next $2,000 of expenses. A key feature of the AOC is that it is partially refundable. Up to 40% of the credit, which is $1,000, is refundable. This means that if the credit reduces your tax liability to zero, you can still receive up to $1,000 back as a refund. However, the eligibility rules for the AOC are strict. The student must be pursuing a degree or other recognized education credential and must be enrolled at least half-time for at least one academic period during the tax year. Crucially, the AOC can only be claimed for the first 4 years of higher education. If you are in your 5th year of college, or if you are in graduate school, you do not qualify for the AOC. Additionally, the student must not have any federal or state felony drug convictions. The credit also phases out at higher income levels. For single filers, the phase-out range is between $80,000 and $90,000 of modified adjusted gross income. For married couples filing jointly, the range is $160,000 to $180,000. If your income exceeds these limits, the credit value is reduced to zero. This credit is highly sought after by parents of college students, as it directly offsets tuition bills dollar for dollar. To claim it, you must receive Form 1098-T from the educational institution, which reports the qualified tuition and related expenses paid during the year. Now let us examine the Lifetime Learning Credit. The LLC is worth up to $2,000 per tax return per year, regardless of how many eligible students you have. It is calculated as 20% of the first $10,000 of qualified education expenses. Unlike the AOC, the LLC is completely non-refundable. This means the credit can reduce your tax liability to zero, but if you have no tax liability, you will not receive any remaining credit back as a refund. However, the LLC has much broader eligibility criteria. It has no limit on the number of years you can claim it. You can use it for undergraduate study, graduate school, professional degree courses, or even individual classes taken to acquire or improve job skills. There is no half-time enrollment requirement. You can qualify even if you take only a single course. Furthermore, the LLC does not require the student to be pursuing a degree, and it has no restrictions regarding felony drug convictions. The income phase-out ranges for the LLC are now aligned with the AOC, meaning it phases out between $80,000 and $90,000 for single filers, and between $160,000 and $180,000 for married couples filing jointly. This alignment simplifies the decision process for higher-income households, as the limits are identical. The LLC is particularly beneficial for working professionals who return to school part-time or take continuing education courses to maintain licensing. While its maximum value is lower than the AOC, its flexibility makes it a valuable tool for lifelong learning. Unlike the AOC's per student limit, remember that the LLC is capped per tax return. Choosing between the AOC and the LLC requires a systematic comparison of your student status and educational expenses. You cannot claim both the AOC and the LLC for the same student in the same tax year. If you have 2 children in college, you can claim the AOC for one and the LLC for the other, but you cannot double up. For students who qualify for both, the AOC is almost always the better choice because it has a higher maximum value of $2,500 and is partially refundable, whereas the LLC caps out at $2,000 and is non-refundable. When calculating your qualified expenses, remember that the definition of what qualifies differs between the two credits. For the AOC, qualified expenses include tuition, required enrollment fees, and course materials, such as textbooks and equipment, even if you did not buy them directly from the school. For the LLC, qualified expenses are limited to tuition and fees required for enrollment, plus books and equipment only if they must be paid directly to the school as a condition of enrollment. You must subtract any tax-free educational assistance, such as scholarships, Pell Grants, or employer tuition assistance, from your total expenses before calculating either credit. In summary, the AOC is the top choice for traditional undergraduates, while the LLC is a flexible option for graduate students and part-time learners. Understanding these rules ensures you claim the maximum credit available. To prepare for filing, gather all Form 1098-T statements and keep detailed receipts for textbooks, lab supplies, and computer equipment. If you paid tuition in December for a semester starting in the following spring, check the rules regarding prepayments, as you can often claim those costs in the year paid. By keeping your documents organized and applying this comparative framework, you can complete Form 8863 accurately, reducing your tax burden and making your education more affordable. This proactive approach helps you take full advantage of the tax code's educational incentives. To ensure you have a complete understanding, it is also helpful to look at how these concepts apply in everyday scenarios. Many professionals recommend documenting every step of the process, keeping organized records, and checking for updates to regional regulations at least once a year. By staying proactive and monitoring these changes, you can adapt your approach, avoid common pitfalls, and make more informed decisions that align with your long-term objectives and protect your household budget from unexpected expenses. Tax Season School explains tax rules, tax documents, and simple filing habits in plain English. The channel covers W-2 basics, freelance filing, deductions, HSA rules, and common mistakes so viewers can stay organized and make informed decisions with their money. This video is general financial education, not professional tax, accounting, legal, or investment advice. Tax rules change frequently and vary by location and situation. Consult a certified public accountant or tax professional before making tax decisions.